Well, just about the only headline that the Globe is eyeing today is Liberation Day. And it's very speculated what it really turns out to be. Back home, we've heard from our favorite economists that it is more of a recession day. But all of that is in the balance. The day is being seen as a watershed moment in the global economy. Trump hitting the globe with extensive tariffs, as the American president says. He is being kind on them by charging roughly half of what they charge us. Those are the words he used. Now, calling these as discounted reciprocal tariffs, Trump says the U.S. will charge an import duty of 26% on India, 34% on China. And speaking about India, he described tariffs by New Delhi as very, very tough. Trump went on to allude to the friendship between himself and Prime Minister Modi, even as he said that India has not been treating the U.S. right. And about the European Union, one of the biggest trade partners of the U.S., Trump has announced a 20% levy on imports, a 10% levy on the United Kingdom, and these two are the main trade partners and allies of the US. While announcing the most aggressive reciprocal tariff policy, Trump has said that it will usher in a golden age for America. But just take a look at the jitters right now in the global markets on the back of this. Markets across the world are reeling from Trump's shock. That move, Wall Street, of course, leading that bloodbath right now. The Dow has cratered over 1,300 points. The S&P is heading for the worst day since 2022, and the nasdaq deep in the red. Investors bracing for the economic fallout. Among the biggest casualties are tech stocks that are getting slammed. Apple, Microsoft, Nvidia, all taking a beating as fears of supply chain disruptions mount. Autos and industrials, they're also under pressure. Look at Tesla and Ford and General Motors, all of them sliding as higher import costs loom large. And the retail giants, Walmart and Amazon, they're seeing red too. Fresh tariffs could raise costs on consumer goods, on eating possibilities into the margins that they really report quarter on quarter. And look at where the money is moving right now. It's going into gold. It's on fire, hitting record highs. Investors are fleeing to safety. Treasury bonds are in demand. Yields are tumbling as recession fears grow. And the US dollar is wobbling. Usually a tariff war boosts the greenback, but there are concerns of a US growth slowdown, which is keeping the US dollar under pressure. So yes, with the 26% tariff on Indian goods heading to the US, it is sending ripples through exporters, their boardrooms and trade ministries alike. But is this a full-blown trade war? Just another chapter in Trump's art of the deal? Analysts are split on the actual damage. Some say India's resilience will see it through, while others are warning of long-term growth risks. But one thing is clear, that navigating global trade under Trump 2.0 is always going to be a high-stakes balancing act. But to decode how India should respond, what lies ahead for key industries, and whether diplomacy or countermeasures are the answer, let's connect with Jayant Dasgupta, the former ambassador and India's representative at the WTO. And joining him is Jeff Dennis to make sense of what's going on in the global markets. First to you, Jeff. We're seeing what Trump is saying, that now it's a healing process for the patient. But the markets seem to belie that. Look at the bloodbath that we are seeing on Wall Street. What do you make of it?
Well, first of all, if it is a healing process, it's a long-term healing process, and it'll take more than 5 minutes to rebuild the US manufacturing sector, if that's his real goal, through the use of tariffs. That's the first point. And I think the concern in the short term is that the damage will be so great that nobody is able, I think, to look to the long term of what possible positive impact these tariffs could have on US manufacturing down the road. The markets themselves, as you pointed out there, are showing classic signs of what you would expect if there's a recession on the horizon, with equities down, bonds up, the dollar weak. And I think what this is doing here is basically the markets are reflecting the sharply increased risk of US recession, indeed a global recession. Bottom line here is these tariffs are much worse than have been anticipated, hence the, as you call it, the mayhem on Wall Street. And now we have to see what happens. Do they get negotiated downwards from here? Nobody knows. But this is a big shock to the global economy, and it's a big shock to the US economy short term, and that's why the markets are behaving the way they are.
Seems so, Jeff. Let me bring in Mr. Dasgupta on this entire impact of 26% tariff, Mr. Dasgupta. Some analysts are arguing that the impact is limited for India, and others are warning of GDP risks to our economy. One of our favorite economists and consulting editor, Swaminathan Iyer, saying that rather than Liberation Day, we should be calling it Recession Day. Where do you stand? How much of an impact are you seeing on India?
Well, it has been calculated that the impact, of course, before the tariffs were announced, based on certain assumptions, it was estimated that the reduction in exports would be about $9 billion against about $85 billion or so. So that is one estimate. But then there are other factors which have come into play. For instance, in textiles and clothing, India was subjected to a tariff of between 14% and 32%. And it was the same for China and Vietnam and the others. Now, India's tariff would be 26% plus 10%, 36%, whereas China's would be 54 plus 10, presumably about 64%. Vietnam's would be 49 plus 10, 59%. So it also opens up an opportunity for India in clothing, especially. So that is one thing. Similarly, in leather. The third aspect is about pharmaceuticals. And I think there is a review which will be conducted. So it is likely that generic medicines, which India is producing and exporting, will be exempted. It is quite likely that active pharmaceutical ingredients coming from China will also be exempted for the time being, but one doesn't know. So there would be a downside to the tariffs. There would be certain reductions in the exports, but other opportunities will also open up. For instance, in mobile phones, China is the largest producer, but even if we account for the tariff, India can take up a little bit of the space and its exports can also go up. So similar is the case with electronics. So there are possibilities, but India will have to get its act together and scale up production in the short run.
Yes.
Then only it will be able to exploit the opportunities that are coming up.
Yes, there would be certain opportunities, and we'll talk about that. But I have breaking news because, yes, leaders across the world are reacting to Trump's decision on tariffs. And it seems like we are hearing from the French President Macron. He says these tariffs are brutal and he calls them groundless as well. Meanwhile, I want to ask Jeff Dennis, emerging markets, they've been under pressure with a stronger dollar and higher US yields. You tell us, Jeff, does Trump's tariff war accelerate capital flight from emerging markets, or do you see select opportunities amidst this chaos? Because even as we are kind of factoring in the real impact of these tariffs, there are certain opportunities, like Mr. Dasgupta is pointing out as well.
Yes, definitely. And I think actually, although earlier in the year, in late 2024, there you did see a stronger dollar and flows coming out of EM. Latterly, of course, the dollar's fallen. It's fallen very sharply today. And emerging markets, quite surprisingly perhaps, are outperforming. And this has got a lot to do, I think, with the impact of these tariffs on US financial markets generally, but specifically on the dollar. I've just been looking at my numbers. EM today is down 0.7%, which is nothing compared to what's going on in the US markets and also in Europe. And I think that there are opportunities. I mean, clearly we have to see how this plays out. And if there is a recession coming in the US, which I think is probably likely, that's going to pull all global equity markets down for a period of time. I would mention two other points, macro points, in addition to what the ambassador said about some of these sectors, which I'm sure is absolutely right. The two macro things that are really helping India through all of this, perhaps somewhat bizarrely, is the weaker dollar is supporting the rupee. That creates potential room for the RBI to reduce interest rates again. And secondly, oil prices have come crashing down today, which you would expect if there's a fear of a global recession. These are both things that benefit India. So I would never say that EM in this environment yet is a strong buy or anything like that. But actually, there is a lot of evidence that emerging markets are holding up better than perhaps you might have expected in this maelstrom of complete nonsense out of the US government compared to what's going on in the US. And I think that's rather good.
Take that to Mr. Dasgupta as well, because the opportunities seem to be coming through. You may call them silver linings, but even as you call it, foolhardiness on the part of the Americans, At this point in time for India, are there newer opportunities that are growing? Because yes, pharma as an important sector, having really dodged that bullet, we are looking at the possible impact on the IT sector. Many are seeing IT services as one of the biggest casualties of Trump's tariff war, and many say the impact will not come directly from tariffs imposed on India, but rather than that from a slowdown in the form of US discretionary spending as a result of these measures. But what's your sense, Mr. Dasgupta? Where do you think the real opportunities will come through? Will policy moves from the Indian side, we have seen some of those moves already, and more of the kind of bilateral trade agreements with countries outside the US, is that going to be the push that's required to really dip into those opportunities?
Well, there are several things which have to be borne in mind. The first thing is that if the US tariffs are going to remain in place for more than a year or so, the global economic growth will definitely suffer, and the US itself may go into recession. So with the recession, I think there would be a significant reduction in demand, even in the US, for various kinds of goods. There is a budget lab in Yale University which carried out a back of the envelope calculation, and it has come out with the figures, of course, before the tariffs were announced, that the average expenditure of a family in the US will go up by about $4,200 per annum. So and the poorer people, the lowest decile and the second decile, lowest decile, they would be hurt the most. So there would be the consumption expenditure in the US is likely to go down, and it could lead to a case of stagflation also. So that is one thing. The second thing is that, it is perceived as a kind of an opening gambit by President Trump.
Yes.
That he expects countries to come forward and come to the negotiating table and offer various kinds of concessions.
Correct.
And then he will start rolling back.
Right.
So whether he will start doing that after 6 months or 1 year, one doesn't know.
Yes.
As far as India's bilateral trade agreement is concerned, the first tranche is scheduled to be wrapped up by about September, early fall.
Yes.
So we can expect that there would be, some letting up, because it is unsustainable even for the US.
Correct.
And these kind of tariffs, for instance, in agriculture,
Yes.
the US is a net importer of food. It imported more than $200 billion worth of food, and it exported about $170 to $180 billion.
Correct.
Now, a lot of the food also goes towards food stamps, because food stamps are exchanged for food.
Correct.
And the poorer people, a larger part of their expenditure is spent on food.
Right.
So if the food costs go up on an average by 20% or 30%,
Yes.
you can imagine what will be the impact.
Yes.
And it is not sustainable. There would be, I think, strong backlash and
yes,
reaction.
the domestic political backlash for Trump may be very hot to handle. So as much as this remains in the realm of speculation, whether there is going to be a rollback, whether this is just a kind of stepping stone into having a harder push in negotiations with these bilateral trade agreements, and that includes India, that remains to be seen. And India has already made certain moves. Whether you talk about bourbon whiskey, you talk about Harley Davidsons, you are already looking at governments across the world playing ball with the US. Meanwhile, the Indian government is saying that it is examining the implications. Let's bring in my colleague Sumit. He's joining us from Delhi to tell us what we're picking up in response from the government to Trump's tariff blow. Just allow us a moment to go across to him, gentlemen. Sumit, if you can fill us in, what you're hearing from the Indian government side on this tariff tsunami that Trump has initiated.
Well, Indian government's response on the U.S. tariff issue is being closely monitored, as government sources tell us, and it's a very high-level team that is looking at the situation very closely. And in response of India, well, could be part of negotiations. That's why India is giving very measured response. At the same time, India's negotiations with the US on trade deal will continue. They will continue in April also, though they will be virtual in nature. When we talk about India-US tariff situation, well, sources say that India has certain advantages and certain disadvantages. Like for shrimps, India has disadvantage, while for pharma electronics, India has advantages. So that is why situation is very critical, and everything is being done keeping that in mind. If we talk about India-US trade, it's worth around $78 billion. It's aiming to go up to $500 billion, and that's what government say, that government sources say it is in India's advantageous position, because the whole world is looking for any trade deal with India. But US is currently engaged with India only. USTR is engaged with India only for that kind of trade deal. BTA, bilateral trade agreement deadline is fall of this year, and that's very tight deadline. That's why these steps are being taken very cautiously. That's what sources are telling us. And as far as this whole situation is concerned, India has taken a very measured response. Meetings have taken place throughout the whole day today.
A measured response. Sumit, thanks very much for filling us in. Mr. Dasgupta, you heard that as well. What do you make of India's stand right now? Do you think India should be retaliating, getting better at negotiation, or perhaps just adapting? What are the chances that India is going to accelerate these domestic trade reforms I was asking you about on the back of this, such as, reduction of tariffs on imports or further liberalizing of FDI in several sectors?
Various things which India can do, and some of them are, for instance, removal of the non-tariff barriers. For instance, a lot of quality control orders have been issued in the past 2-3 years, and they are militating against our own export interests, against the competitiveness of the domestic industry as well. So those need to be, taken off the table. And that is just one of the things which I am mentioning. There are other things which will increase the efficiency and the competitiveness of Indian industry. So those things, if they also have figured, for instance, in the national trade estimates of the USTR, which came out on the 31st of March, 2025, then I think we should take a very serious look at those things, and we should address those issues. That would be, giving kind of a signal, the right signal to the US that we are engaging. The second issue is about tariffs. Harley-Davidson motorcycles, bourbon, whiskey, medical devices, for instance, the US has been saying that this upper limit, which the Pharmaceutical Pricing Authority, for instance, has put in place for knee implants and cardiac stents, that militates against the US export interests. So that is, again, something which we can take a look at. So there are various issues, and I'm sure that if we take them up and we have intensive consultations with our own stakeholders, we can concede ground, but without compromising on our core interests. And
that's going to be an important piece, Mr. Dasgupta. But, Jeff, as far as the Fed is concerned, and it's going to be an important piece, it's been walking a tightrope on rate cuts. But this kind of market turmoil, will it force their hand? Or does it, this kind of sticky inflation expectation, is it going to keep them cautious? How do you see the Fed balancing growth risk now with all these inflationary pressures in the months ahead, even as we talk of a possible recession in the United States?
And I think here is that what Trump has done overnight is, late yesterday for us, is essentially increase the risk of stagflation in the US. And that's what your question implies, Vikram. In other words, you're going to get a short-term impact on the price level for sure, but probably on sustained inflation. And meanwhile, you've increased the risk of recession. And it makes the Fed's job even harder than before. But if you wanted me to net it out, which I'm happy to do, I think it increased, given that I think there is now a very strong risk we get a US recession, assuming these tariffs are not reined in immediately, more than 50% risk of recession. I think therefore the balance is now tipping towards Fed rate cuts, which are more significant, greater than we'd expected just a few days ago. So my call has been 2 rate cuts this year. I suspect that's the minimum now, and it may well be more. Depends on the economic data, but frankly, Trump's tariffs are taking a massive risk with the US economy, indeed with the global economy. And that means I think the Fed ultimately, whatever the short-term inflation story is, they're going to be forced, I think, to cut rates perhaps a bit more than anticipated. So I think your question is absolutely the right one, and I think that's the best answer.
So, of course, we are monitoring the situation as it happens. But Mr. Dasgupta, if I can get a final word from you, someone saying that India may actually gain from China's tariff plan, which is, like you pointed out as well, and it's obvious, it's about 54%. Is that the piece that the Indian government needs to go after? Because we have been talking about, making our manufacturing base stronger. Is this the push that was required?
Well, to step up manufacturing, to diversify our base, and to bring in technology and capital, it's not going to be an easy job, and especially not in the short term. It will need at least 3 to 5 years with all the different departments of the central government as well as many state governments putting their shoulders to the wheel. So this is the right time to take a very serious view and to put serious effort into our domestic reform process. If we really want to achieve our Viksit Bharat goal and Atmanirbhar Bharat goal, both will require very serious reforms. And this is a wake-up call. This is an opportunity as well. So I think we should set in motion wide-ranging reforms which will enable us to increase the share of manufacturing in our GDP.
Well, we are looking at the Trump tariff storm hitting us, but India's resilience, the diplomatic dexterity, which will be put to the test, all of that is going to be on our radar. Some sectors may face short-term heat. This could also be a wake-up call to fast-track trade reforms, deepen alliances, and play the long game in global markets. But one thing is quite sure, global trade has just become a lot more unpredictable. And now the question is India going to bend or break or bounce back stronger? That's a story that's still being written. But Jeff Dennis and Jan Dasgupta, always a pleasure hearing your insights on India Tonight. Thank you so much for joining us this evening. We'll take a quick break. On the other side, we keep the discussion going.